All right, this is Ubaid on behalf of Electronics, and in this video we're going to talk about bank management. Okay, now bank management has to do with three conditions. Okay, number one has to do with reserves. When we talk about reserves, bank needs to have enough reserves in their bank vault. For example, they need to have enough money for them to use in an emergency. Okay, not to mention, okay, by law they're supposed to have certain amount of reserves, okay, for them to carry out their business, okay, to avoid bankruptcy, for example. All right, so for them, okay, reserves basically means cash flow. Okay, banks deal with a lot of transactions day in and day out, which means that they need to have cash flow. Okay, money coming into the bank and going out. Okay, for them to stay profitable. All right, so this is liquidity management. Now, apart from liquidity management, banks also need to stay profitable. Okay, so they need to earn profit. Okay, on an income statement, okay, once you take away your cost of goods sold from net income, you get your gross profit. Okay, and gross profit, take away your operating expenses, will give you your net profit. Okay, so in this case, when we talk about net profit, okay, we're talking about loans as liabilities. Okay, we're talking about operating expenses such as the expenses relevant to the building where you have the bank. Okay, utility, wages, so on and so forth. Okay, so cost of goods sold, again, we're talking about cost of borrowing money. Okay, borrowing money from people who make a deposit in their bank accounts, transactional deposits. Okay, and this has to do with using that money, okay, to earn an income. Okay, in the case of a commercial bank, they will be using that money, transactional deposit, to lend out money to people who need it. Okay, to lend money in terms of mortgages, in terms of car loans, in terms of personal loans, line of credit, so on and so forth. So when it comes to profit, they need to be able to make enough profit for them to carry out their business. All right, so this is asset management. All right, now apart from asset management, okay, you also have net worth. When we talk about net worth, we're talking about having enough equity, enough capital, okay, for you to avoid bankruptcy. So this is avoid bankruptcy. All right, so when we talk about capital for a business, for example, okay, they need to have enough net worth. Okay, and how do you figure out net worth? Assets take away liabilities. Okay, their assets should be more than their liabilities, hence capital. All right, so these are the three conditions that the banks must meet for them to manage their business. On behalf of Electronics, this is Ubaid. Have yourself a great day.